Before we begin, please support the channel by subscribing, liking, and sharing this video. Constructive discussion is always welcome, and we invite you to share your views and insights in the comments. Market Overview and Semiconductor Sector Technical Review. This video presents a direct informational narration of the source document, so let's just dive right into it. Today we're unpacking a fascinating broad market overview alongside a really detailed technical review of the semiconductor sector. Here's a quick roadmap for this explainer of the source material. We'll start with the macro side, covering the market overview, Fed minutes, Treasury buyback mechanics, and the big question of whether this is quantitative easing. From there, we'll transition straight into micro-level technical stock analysis for the semiconductor sector, focusing on AMD, Marvell, and Broadcom. Section 1. Market Overview and the July Fed Minutes.
Right now, as detailed in the source document, there is a stark, literal, night and day contrast happening in the market. The broader S&P 500 has been riding this wave of positive sentiment with 288 components up, 214 down, and the equal weight up 1%. This was heavily driven by the healthcare sector. Moderna saw a massive 176% jump just on their cancer vaccine trial results. But if you flip over to the semiconductor index, it's completely different. A staggering 26 components declined, with only 4 managing to go up.
Shifting gears to the July Fed minutes, the data indicates that most participants actually support keeping rates exactly where they are right now. Interestingly, there's a new proposal on the table to reduce the number of Fed meetings to just 6 per year, basically to give more time for economic data to accumulate. While there aren't any immediate decisions being made, keep a close eye on 2026. They formed 5 new committees specifically to discuss major framework changes.
Moving on to Section 2, Treasury Bond Buyback Mechanics.
The primary driver behind recent market stabilization has actually been the U.S. Treasury stepping in directly to suppress bond yields. The document points out they're increasing long-term bond buybacks from $2 billion up to $4 billion per operation. With 9 of these operations scheduled for this quarter alone, we're looking at a $180 billion quarterly increase. To put that into perspective, annualized, that projects out to an absolutely massive $1,440 billion, or $1.44 trillion, in long-term bond buybacks every single year.
Which naturally brings up a huge question sourced directly from the document. With these massive buybacks happening, where exactly does the money come from to execute this?
Well, it's essentially like moving money from your left pocket to your right pocket. The funding comes directly from existing cash balances sitting in the Treasury general account, like unspent tax revenue, or it's just funded by newly issued debt. So it acts strictly as a temporary cash smoothing operation.
And if you're thinking, wait, is it even legal for the Treasury to buy back its own debt this way?
Turns out, yes, absolutely. The legal basis here is U.S. Code Title 31, Section 3111. It explicitly allows the Treasury to use funds from debt sales or the general fund to buy back bonds before they hit maturity. And there's actual historical precedent for this. This exact mechanism was utilized back between 2000 and 2001.
All right, Section 3, is it quantitative easing?
Let's clear this up. The source clarifies this is not quantitative easing. Why? Because unlike the Fed, the Treasury isn't creating any new base currency here. It relies purely on existing cash or new debt. Plus, with the ongoing budget deficit, net debt isn't actually being reduced at all. What this really is a targeted stabilization tool to combat short sellers. Those sellers were pushing 30-year bond yields to 2027 highs of 5.3 to 5.4%. The Treasury is basically firing a warning shot to get them to back off. As a result, we did see a short-term technical bounce of 1.67% for the TLT, driven mostly by short covering. But the report notes that a long-term bull market for bonds completely lacks a fundamental foundation right now. With the national debt approaching $40 trillion, sticky inflation, and persistently high interest rate expectations, the math just doesn't support a sustained rally yet.
Section 4, AMD Valuation and Technical Levels.
Let's break down the exact micro-level numbers for AMD. The 2027 forward median valuation expectation sits at 430. Looking at the technicals, the critical support bands to watch are between 427 and 453, then 461 to 476. If it falls through, there is a much deeper support level down at 334 to 336. On the upside, for resistance, it hits a wall right at 400 and again in the 506 to 528 zone. Ultimately, breaking higher relies heavily on a massive Q4 2027 earnings explosion.
Next up, Section 5, Marvel's Custom AI Partnership.
So Marvell has this rapidly expanding custom AI chip partnership with Google. We're talking TPUs, AI accelerators, and memory interfaces, and it's a huge deal. Google secured stock warrants to purchase up to $1.22 billion of Marvell stock at just 80 cents per share. This establishes a firm dual supplier model, meaning Google gets to significantly reduce its historical reliance on Broadcom.
You really have to look at the equity warrant vesting schedule here to see the strategic depth. In year one, nearly 1.4 million shares vest equally. But then, from fiscal 2027 through to 2030, the remaining shares are tied to strictly defined performance milestones. They vest for every $500 million in incremental revenue achieved. It's a structure that deeply bonds both companies together for mutual growth.
Based on the source's forward valuation, Marvell's upper limit hits 165 for January 2027 and climbs to 247 for January 2028. Mapping out the exact technical resistance zones from the document, we're looking at ranges of 253 to 2727 and a particularly heavy zone spanning 278 up to 318.
Section 6, Broadcom Valuation and Market Position. As Marvell took a slice of the pie, Broadcom essentially took a hit, dropping 4.61%. Looking at the structural valuation out to the October 2027 fiscal year, Broadcom's forward value range is calculated between 572 and 763, with the median right around 668. The critical technical support zone currently lies between 324 and 365.
The source document uses a really vivid analogy for their market caps. Broadcom, sitting at a massive $1.72 trillion valuation, is structurally likened to a whale. Much like NVIDIA, it's just harder to move. Marvell, on the other hand, with roughly a $200 billion cap, acts more like a dolphin. It trades a lot like AMD, smaller, easier to move, but subject to significantly higher volatility when market sentiment turns turbulent.
For our final technical update on the overall semiconductor index, the data shows it trading locks strictly between the 3489 and 5320 levels. We're seeing volume contraction here, which basically means the sector is stuck in a holding pattern of consolidation right now.
So what is the ultimate takeaway from all this? We're left looking at a massive macroeconomic tug-of-war. Can the Treasury's short-term stabilization intervention actually lead to a structural, long-term decline in bond yields? Or will these unconstrained spending deficits and relentless long-term debt pressures inevitably pull those yields right back up?